Alrighty, traders, welcome. It is Thursday, July 25th, 2024. We're going to make a short tonight and talk to you briefly about what's going on in the markets, which is a big nothing day today. But we are going to take a minute. We're going to also take a look at the IRA that we've got as well. So we're going to take a look at the IRA. And so stay tuned. We'll take a look at our account. We'll take a look at the IRA. We'll take a little bit of a look at the markets overall and what they did today as well. And then I do want to talk to you before I even get started, though, about just keeping it simple. Okay, so let's talk about keeping things simple. So we talked about this in our group today as well, because there's everyone's coming up with the VIX this and the VIX futures and this indicator's never been this much something and whatever. But what I want you to do is I really want you to simplify things. So if you simplify strategies, it's going to help you focus on the most important factors and help you get clarity and focus. It's going to, number two, it's going to reduce overwhelm. Okay. Most traders are using too many indicators, watching too much news, overwhelming with information. I'm really trying to break people of posting news. Well, the Fed said this, or so-and-so said that, or this earnings, or that earnings, or the Middle East is this, or the president is going to be this, and whatever. That's all outside news, okay? What you need to make sure you're doing is staying true to your trade plan. So reduce that overwhelm. Number three, too, you got to stay consistent. So keeping simple strategies makes it easier for you to stay consistent. Not, hey, I'm going to adjust this piece here and I'm going to move this up and this got the so-and-so delta, so I'm going to move this trade and I'm going to adjust my deltas and I'm going to then roll and then I'm going to become inverted and I'm going to go upside down and inside out and all these crazy things. You know what? Keep it simple. Okay. Enter your trade based on your criteria, have a stop, and have a profit target. Okay, and follow them. You don't need to adjust your trades. Okay, in there, just put the trades on and let them run. And simplicity is also going to help you with your risk management, right? So it's going to enhance your risk management. It's going to prevent you from taking unnecessary risks. It's too much info. You guys are watching too much and posting too much stuff. Okay, I know it makes you seem smart when you post all these news and all your great theories and stuff. No, it doesn't help anybody. Certainly doesn't help other traders, and it probably doesn't really help you either. Okay, you want to remain in emotional control, and the best way to do that is to keep things simple. Simplify your methods, drown out the noise, stay focused on what you see, and trade what you see, not what you think or what other people think. And most news that you watch is simply going to be someone reporting an event and then giving their opinion on that, and typically what you think that means. That's what CNBC and everybody else is somebody giving their opinions on an actual event that happens. Well, the opinion doesn't matter. Okay? And the event doesn't matter ahead of time because it shouldn't change what you do. Once you're in a trade and something happens, okay, then you trade what you see. You get stopped out or you stay in or what have you, okay? But really, you just trade what's in front of you. All right, so I'm going to give you a couple stats. And there was a study by the National Bureau of Economic Research, and they found that simpler trading strategies often outperform more complex ones. So an example, over a 20-year period, simple moving average strategies outperformed more complex ones by over 1 to 2% annually. Okay, that was over, again, a 20-year period. So over 20 years, just following something that's simple as a moving average is going to outperform pretty much anything else. You're just looking at the trend. Are we going up or going down? Stay in the trend. Number two, another great one out here was the American Psychological Association indicated that information overload can reduce your decision-making accuracy by up to 20%. 20%. Okay. Too much information is going to overload your mind, and it's going to reduce your ability to make decisions by up to 20%. Okay. This means that as a trader, if you're inundated with too much info, you're more likely to make a poor trading decision 20% of the time because you're following all of this news info. All right, success rate of experienced versus novice traders. If you look at the Journal of Finance, okay, experienced traders who focused on just a few key indicators had a much higher success rate like 60% higher compared to novice traders who relied on all kinds of complex indicators, who had a much lower success rate. Bottom line, stick to a few more reliable indicators, okay, out there, and avoid all these other complex ones that you see. Okay, and then the last thing here. Oh, let me get to another one here. I want to find this one. Reducing stress. Okay, if you don't have to listen to all this news, okay, you're going to reduce your stress. We talked about yesterday not staring at your net lick all day. I don't care if it's up or down. Do I have any trades to close? No, then it doesn't really matter whether my net lick is up or down. Okay, the only thing that matters is managing my trades. Okay, as long as I manage my trades and I keep booking winning trades, a net lick will eventually get there. So don't worry about it. The second thing here is you can reduce your stress. Okay, don't be checking after hours. Yes, the futures trade, 24/7 doesn't mean, or 24/6. Okay, doesn't mean 23/6. I'll even say that. Doesn't mean you should check it all night and fret about it. Okay, limiting your news is going to reduce your stress. It's going to help you focus on the key information. It's going to increase your productivity. Okay? And there was one more study I wanted to share. And I shared this with our group today, that checking news frequently will reduce your productivity by as much as 40%. Okay, that was one piece. And traders who consumed less market news were 25% less likely to make impulsive and emotionally decision-based trades. Okay, so there's a lot to be said, okay, by reducing the amount of news and information that you're taking in, and simply keep to a simple trading strategy. Follow your plan. Don't even look at your own P&L, and you're going to be in much better shape. All right, so that being said, let's take a quick look at what we did for today as well. And hopefully a little bit clearer video today, but still on vacation here. This is actually the view outside of my patio here down the beach here in Jupiter, Florida. All right, so let's take a quick look at our account for the day today. Delta crept up just a little bit, 2.24%. Nothing to really worry about there. Theta 1586, a little bit higher, 0.31, perfect. Like our theta, net lick stayed almost exactly the same. Now we were up 4 or 5 grand at one point today, and then big late day sell-off knocked us all the way back down to pretty much a break-even day. So we're still staying right where we were. And then BP usage crept up a little bit to 392. We're still sitting around 64% when we're not including bill. So there's nothing to do, no trades to put on. It's not in any kind of danger zone. I don't have any trades that are in any danger of closing. So we're just going to let this thing ride and just don't put on trades. Still keeps us at about a 28.7% realized P&L for the year, while the market continues to fall down to 13.91. So we're more than doubling the market. But one thing I wanted to show you is, if you look at the chart, back on the 16th of this month is when the market hit its high. Okay, so looking at the 16th here, where were we? 529. Okay, we have dropped in this account 3.4%. So we've given back 3.4% of our net lick in this particular account. However, I want to show you a few things. So 3.4% down. If we look at SPY for the exact same time period in SPY, back to the 16th here, it's down 4.7%. So we are definitely outperforming the market. Okay, we're down less than the market. So as the market's been moving up, we have been outperforming the market to the upside. And now that the market's been pulling back, we're outperforming it to the downside as well. So we're really starting to distance ourselves from the overall market. Again, I'm not benchmarking against the SPY because that's not my goal, is to meet or beat the SPY. My goal is to hit my budget. So I'm really not doing that. But I wanted to give you a sense of the way we trade not only outperforms in good markets, it's going to outperform when the market's falling back as well. And if the market really keeps falling, we're going to really outperform the market significantly. But we're down 3.4% from the 16th, which was the high in the market. Right now, we did hit a new, almost that same number 2 days ago there, but 3.4%. And I really want to bring that out because one of our members had asked me, well, how's the IRA doing? Because the IRA has a little bit of a different bent to it. Well, since that 16th in the market, where we hit basically our high or close to one of our highs for the year in the portfolio and in the market, the IRA is only down 2.2%. So while we're down a little bit more, so I think I got rid of it here, we're down 3.4%. The market was down 4.7%, and the IRA is only off 2.2%. Why is that? So the IRA is performing better, and it is based upon 111 trades in the IRA here. So it's performing even better, okay, than the overall market is doing. So I just wanted to point that out, but the IRA is doing fantastic. Primarily, it's in 111, so there's less naked puts. So it's in really, really, really good shape. So lower the IRA is. Now, the downside of that is, look, it's up 10% for the year. We're averaging 1.5% a month, which is our goal. Our goal is 1.5% a month in the IRA. If you're happy with 9% for 10% for the year, fantastic. I think for an IRA, it's awesome. Our goal is 18% a year. We're perfectly on track. The market's down 4.5%. We're down half of that. So there is something to be said for putting on some of the 111 trades. It does reduce the overall stress in your portfolio because you have less naked puts. However, when you look at our full portfolio with 112s, 28%. So if you're in an IRA and you want a little bit more safety, we trade the 111 trade, and we trade a version of that. Okay, we do trade some other things in there. We put some strangles on as well. But if you really are looking to generate income, because we're traders, we're not investors, and there's a big difference. And I really look at my style of trading as really a combination of trading and investing. It's really longer term trading. It's not as much investing, but it's still longer term trading. I don't day trade. I'm not short term trading. I'm not in and out within a couple of days or a week or two. It's taking me 30 days, 60 days, sometimes less. Sometimes we'll be out in 14, but that's not the goal. Okay, sometimes you just get out earlier because it happens to work that way. You get a volatility crush, or the market moves in your direction with the volatility dropping. Either one of those things can happen there. But I am a long-term options trader, okay, which means I'm trading options that are 60, 90, 120, maybe even 150 days, and I'm also selling leaps. Okay, so I'm also trading leaps out there. So I love anything that's 90 days or more. Okay, I get fine data decay. Also, what we've found in studies is that anything that's 90 days or longer, the implied move, okay, is greater than the realized move, okay, which means it's overstated. The longer term out, it's not overstated, it's actually understated with those 45 DTE, 60 DTE, 30 DTE type trades. I know that's typically, the way many of you are operating on these 45 DTE type trades, but at 45 DTE, the realized moves are greater than the implied moves, okay, which means you have a much larger chance of being stopped out, and you're not getting paid as much for the trade. Okay. With the 90, 120-day trades, things like that, I'm getting paid more, and the move typically does not move outside of that implied move, which means I have safer trades and I make more money on these particular trades, which is what I love. So I love the longer term trade. But anyway, I wanted to point a few of those things out for you today. Hope this was helpful overall. So kind of a nothing day in the market today, but we'll be back at it tomorrow. But I really want you to take some of the things I said at the beginning about keeping it simple and tuning out the noise. I'm having a hard time breaking a lot of people of that. They want to post all kinds of stuff from other places and what they read on Twitter and what CNBC is reporting and what Tom Lee says and what somebody else says. I don't care about any of that stuff. All I care about is the chart. What is the actual underlying doing? Okay, what's it doing? How's it performing? Putting my trades on, letting the probabilities work. And if you do that and you keep it simple, you're going to outperform everybody all of the time. All right, stay tuned for more tomorrow. Have a great evening. Take care, everybody. Bye-bye.